Do you really think you'll learn and grow and achieve without failing? Maxime Lagacé. No, you will not. And for the tourists who come to the channel, listen to us on and off, maybe the first 5 or 10 minutes of the show, and then move on and come back a week or two later and ask me to follow all these disparate charts, you're not getting what it is we're about here. We cover the 4 ETFs that we cover every day because they are good learning tools. We're not a stock calling service. We're an education firm. As you practice with us, you're supposed to be learning how to actually chart and follow the charts on your own and find stocks and ETFs you are interested in that you first practice trade, then you fractional trade, and you move on down the line with your knowledge. Now, we had a great Patreon live question and answer session today for the Patreon members that weren't able to join us. I just fired off a recorded video of the live call-in, another great training session. Thank you so much for being with us. We reviewed a number of stocks, answered your questions, had a good hour and 5 minutes, something like that, of training. Thank you for everyone that was there with us live. You don't have the book, Charting Your Way to Wealth. That's your first step besides listening to us every day. Get the book. Learn what it is we teach here in a 60-something page format. Every word I put down there, it is not full of fluff. I could have made it 300 pages. I didn't. I put in there what counted, what you need to know, what knowledge you need to have. It's not full of a bunch of charts that you see me talk about here every day. It is full of words with meaning. Our job here at Charting Wealth is to help you chart these markets. And you will see, those of you who are subscribers, in the show notes today, you will see a link to a video that I think is very valuable. And it is all about no one wants you to have our knowledge. Why? Because they want you, particularly the financial news networks, the financial media, the Wall Street Journal, Bloomberg, CNBC, you name it. They want you to listen to them. They want you to listen to their ads. They want you to add to their bottom line and their revenue. The only thing that matters, my friends, is price movement. That's what we focus on. Now, say you're a value investor. That's all well and good. I want to buy things that have value, but I want to buy them at the right time. There's the right time to buy and sell everything. If you buy it too high, regardless of its true value, it may sink out from underneath you and you lost everything. And the training that we have today gives you that mindset. If you're not a subscriber, that's for free at chartingwealth.com. You won't get this training. You got to go there, sign up at the website chartingwealth.com. It's free. You get the daily trainings every day that push you along and help you to master these charts. 10 to 15 minutes a day is all we ask, and time is running. To jump into these charts, we see, again, stocks and gold up, bonds down. We see the S&P 500 up 0.62% for the day as depicted by SPY, the Spiders S&P 500 Trust Series Exchange Traded Fund. Look at that candle as it is developing. Higher high, green up candle, price percent oscillator gaining momentum, derivative oscillator gaining momentum. Looks nice, doesn't it? Just keeps moving up. How inflated will this market get? I don't know. The higher things go, the more they tend to fall. But until they do fall, and we tracked the last fall, didn't we? Didn't we do it righteous, my friends? Those of you who were with us, well, you need to stay with us every day so you see when the next one happens, because boy, it is a-coming. It will be coming at you like a freight train. What do we see on the 2-day chart? We had that 2-day crossover. It has ended with a higher high as a 2-day recross. And of course, the price percent oscillator slowly pulling away from the red signal line. Derivative oscillator moving up. Check it out. Quite beautiful, isn't it? Jumping in point on Monday at 3:50 or so in the afternoon. Somewhere around the 3:26 mark. High of 332.39. Now, this is getting long in the tooth. If you notice, you only have so many 2-day recrosses until the weekly peters out. So the more of these you see, the more dangerous they tend to be, because waves end, don't they? Everything that goes up comes down. Everything, well, not always in the market. You can have stuff go to zero. Typically indexes do not. Bonds do not. Gold does not. Now single companies can. So usually, well, all we've ever seen is if the S&P goes down at some point, it goes up. And remember, we're sophisticated when it comes to our practice trading. We can make money in our practice trades when the S&P goes up. And guess what, my friends? When it goes down, there's something called inverse funds. And in fact, I'm going to put at the end of today's training, let me grab a pen so I can write it down to make sure that I do it. I want to make sure that you guys, at the end of today's video, you will see there will be an inverse fund training, how to make money in your practice trades when markets crash. Remember, not a stock calling service. We're an education firm, but you can see how it has been tracking down as the market's gone up. But when the market crashed, it drove up radically. So there are choices if you know what's going on. Now, we looked at the weekly. We looked at the 2-day. Let's look at the half-day on the S&P 500. Up in the morning, a little bit of a pullback in the afternoon. Price percent oscillator, derivative oscillator heading up. We're going to redraw our 4-hour trend line to attempt to capture things as best we can. Yes, there we go. Just going to update that trend line. Make sure the 2-day, we can update the 2-day also. This is what's so brilliant about the ease of using TC2000. It's free version, freestockcharts.com. And you get ready to get serious, you need to upgrade to TC2000. Look at the link in the show notes for $25 off. This is the only charting software I use. Most of them don't have the price percent oscillator. If you're using some free version of something that doesn't have the price percent oscillator, well, you're getting what you don't pay for. Here with Charting Wealth, we use TC2000 and we love it. And it has just about every indicator you can imagine on it. And it is amazing to use. Let's go to the Qs. Up for the day, 0.25%. Reaching a higher high, we see a green up candle. I'm starting with the 2-day. Didn't mean to do that. We do have the same happening here. We have the 2-day, the weekly rather, moving up. Price percent oscillator moving up. Derivative oscillator still losing a little bit of momentum. That's from that pesky red spinning top back 2 weeks ago. We see the 2-day chart hasn't recrossed yet. Just working on doing that, even with the second 2-day candle. So 4 days in, still don't have a recross. Be careful when it does recross. The latest it could do it, of course, is going to be when? On Friday, since it's already Wednesday. So watch that, pay attention. And we go from, we see the derivative oscillator still negative, but that price percent oscillator is tracking up. 2-day to the half-day, you see, and we'll redraw that half-day trend line as best we can. We want to always try to connect 3 candles to make it worthwhile. We see things up in the morning, not quite as high in the afternoon. Price percent oscillator devolving, derivative oscillator losing upward momentum. That's where we are, waiting to see if there's going to be a 2-day recross going up for a potential jumping in point, again with trepidation. Now we're going to move on to 20-year bonds, down 0.87%. Check it out. We have a red open box candle. It means a slowdown in the up movement. And look, it's just not enough energy to cross over with that down movement. Wanting to see a potential for a weekly vertical crossover going up on bonds, but it just isn't going to do it. Maybe we'll have a bounce off. We'll see. Now, let's go from there to the 2-day. What do we have happening? We have a green spinning top, lots of movement on top, a little on the bottom, still tracking up the 2-day trend line, waiting to see if there's going to be a 2-day recross going down. That would be great, coupled with a bounce off of the red signal line. Your entry point would be when that 2-day recross occurs. We'll wait, see if that happens. Look at the half-day chart down in the morning. A little bit of a recovery in the afternoon, but still down for the day overall, 0.87%. Now we go back to the weekly. We go to gold. Gold up 0.93% for the day. Look at that big green up candle. Aren't you glad, folks, that you jumped in on that weekly crossover going up. If you did, hopefully you did on your practice trade around the 166 mark. What's the high of highs so far? 166 to 193.13 in the course of 1, 2, 3, 4, 5, going into the 6th week. Is that super successful? You're darn right it is. And of our 13 weekly vertical crossovers this year, 12 of them have worked smashingly well. I'm going to go ahead and update that last chart I brought you in June. I think it was through June. Going to update it through July. And again, just brag on the techniques we use here. Let's do a little bit more for you. That's it for our 4 big charts. I'm going to just show you what's happening in Bitcoin, popping up 4% for the day. Check out that weekly Bitcoin chart, just hammering up, going up to not the highs that it reached way back in 2018, but again, it's up to 11,000 and something, $629.02. That's a big up day of 4%, is it not? Look at that bounce off the red signal line. And again, cracking up for 2 strong weeks so far. We're going into the 2nd week, haven't completed it yet. And we can see how that 2-day recross that we told you about, jumping in point was somewhere around the $10,765 mark to a high of $11,629.27 in 6 days. Not bad. Not bad at all, if I say so myself. We go to the half-day chart up in the morning, up for the day. Hasn't crossed over yet, but we're not concerned about that. We're paying more attention to our 2-day and our weekly. Those are the charts that guide us. The 4-hour, the half-day chart, it tells us what's going on intraday, but it is not our decision maker. Okay, what's going on in real estate? Down for the day, 0.50%. We do have a green up candle forming as we've talked about before. The high, 182.12. The high last week, 182.07. So we are hitting a higher high. Price percent oscillator tracking up. Derivative oscillator gaining a little momentum. 2-day chart, that's where we can see things just leveling off. Again, hitting around the same high, but devolving somewhat. Price percent oscillator moving up a little bit on that 2-day chart from the movement yesterday, I guess, and the derivative oscillator gaining upward momentum. So, or maybe the movement all the way back on Monday. We go to the half-day chart. What do we see there? We see popping up in the morning and then losing some of that energy in the afternoon with the price percent oscillator rotating over. Derivative oscillator has stayed negative. Now, look at oil. We had that crossover going up, weekly vertical crossover beginning of June. Oil's just plugged along this last week. It devolved a little bit, but then so far this week, popping up nicely. Again, high on oil. $31.02. We started off somewhere at the 28.30 mark. So again, I mean, don't forget, look at how much oil has lost. Oh, it just has gone from $104 to a low of $16.88. So it's doubled since then. And we'll just continue to watch, see what there is to see there. Look at the 2-day chart. Now this, again, we can see where we had things popped back on the 22nd, that 2-day candle representing the 21st and 22nd, ending on Wednesday the 22nd. Then for 6 days, sliding sideways and down, sort of ending that on the 2-day candle ending on Monday. That represented Monday and Friday. That was Monday the 3rd of August. And then this latest one popping up, that's where you popped up and reached that high. So that's good to see. Well, folks, that's where we are. Oh, by the way, silver up another 3.3%. And of course, you know where our silver crossover was back on the 8th of July. That's when it was on that 2-day. That was that 2-day recross jumping in point somewhere around the 1721 mark to a high of $25.28 in about a month. That's not too bad, is it? Of course, that weekly vertical crossover, which would have served you quite well, it was around the $15 mark up to a high, of course, of $25.28. That's where we are, folks. As we end the day, track these charts yourself. You've got to practice trade. You've got to learn this. I won't always be here, and you don't need me. You need to learn how to do this on your own. We're not a stock calling service. We're an education firm. Educate yourself. Empower yourself. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.